Good morning, or actually I should say afternoon. Chris Gant Sorensen with Haynsworth, Sinkler, Boyd Law Firm. And today we have Demetrius Pyburn here. Looking forward to talking to you about unemployment fraud. Last year, Demetrius and I had a good bit of experience helping clients on responding to unemployment fraud issues. And while we know that tomorrow the South Carolina has stopped some of the pandemic unemployment benefits, there are still fraud claims that may arise from the pandemic unemployment benefits. Demetrius is going to talk to you about that. But also, this information is something that you can keep in mind about what you need to do in regards to unemployment fraud in any context. And certainly it does arise outside of pandemic. I'll also say too, that Demetrius has got some interesting facts and some interesting things that he's going to share with you about that. And so I'll go ahead and kick it to him. Keep in mind that if you want to put in your chat, put your questions in the chat. I'm going to be monitoring the chat, and I'll make sure to ask the questions that you have for Demetrius to answer. You all asked us to cover unemployment fraud, and so this is us responding to requests. So keep those requests coming for anything else that you want to hear about, and make sure you've signed up for our blogs so that you can continue to be included on our alerts as well as these updates. So with that, Demetrius, let me kick it to you.
Thank you, Chris. And I want to thank everybody for being here. Just reiterating something that Chris said earlier, please ask your questions. We're going to try to get them throughout the presentation. I've received a couple questions prior to this presentation, so I wanted to let you all know if you've asked a question prior to this webinar, I did receive them. I know some employees have been contacting their employers, letting them know that they've received 1099s or they received notice from the department letting them know that a file has been claimed using their personal information. So we're definitely going to go over that in this presentation. Also go over some of the resources, talk briefly about the fraud units with the department and with the Attorney General's office here in South Carolina. We'll definitely talk about that as well. So I wanted to let you know that I have received those questions, and we will be going over that in the presentation. By way of background, COVID, I know it's been a long 15, 16 months for businesses, for HR managers, dealing with many questions. Do we stay open? Do we close? What do we do with our employees? Are we capable of employing these employees or working from home, or do we have to lay off or furlough? And thousands of Americans across the country, millions of Americans from across the country, thousands in South Carolina, became dependent on the Pandemic Unemployment Assistance Program, PUA, and other unemployment programs through the state, just to help families get through the pandemic. Because of the sheer volume of applications that have come in as claims that came in from the department, some people were taking advantage of the unemployment system. The department said there was more applications during the height of the pandemic than in the hurricanes in 2016, the storms in 2016, and they had not seen the numbers of claims, initial claims that were filed in the department. They had to hire additional personnel. They had to revamp their systems in the middle of the night just to get through the daily grind, and their phones. Many people were complaining about the calls, waiting hours and hours just to get somebody in the department just to discuss. But I wanted to focus my efforts in discussing about UI fraud, specifically UI fraud. And as of February 2021, where the department provided their update, they had submitted a total of 2,855 unemployment insurance claims to state and federal authorities for investigation and prosecution for UI fraud. For those referred to the Department, Federal Department of Labor, U.S. Department of Justice National Unemployment Insurance Fraud Task Force were taking over the investigation. But I wanted to break down, what is UI fraud? Let's start there. What is UI fraud? UI fraud, unemployment insurance fraud, is considered when individual or employer knowingly misrepresents material facts that allow someone to collect unemployment benefits when he or she would otherwise be disqualified. Also, specifically with employers, the UI fraud is also defined as tax liabilities owed to due when that is misrepresented. And we'll talk a little bit about that later on in this presentation. Generally, we see two categories of fraud, and those two categories encompass many things. We'll speak specifically first with the individual as a victim. The people who I identified earlier are people who received notice that their information had been compromised and used in order to file a UI claim. And the second category is the bad actor category, is the individual claimant was misrepresenting some type of information to the department when they filed their claim. So I'll take each one in turn and we'll give little real world examples of each. So before I speak a little bit about what the text says, I want you to direct your attention to the right. These are some of the phishing and some cyber crimes that are done either on Facebook. If you look at the top left picture, that looks like a Facebook comment directing somebody to send a text to the number to send compromised information, and bottom of the page is a text message, looks like a text message that was also sent. There's many forms of these type of cyber crimes, and we could just talk about cyber crimes in its own our presentation, especially ransomware, phishing, spear phishing, and other technical terms. But these are some of the efforts done by fraudsters in order to get personal information. While this type of fraud makes many forms, we're talking specifically about an individual who receives a payment from the department where they did not apply and kept the payment. Other types of fraud is when someone responds to those messages to the right with their personal information, and they provide that information, their social security number and their other personal identifying information. The South Carolina Attorney General's office said their insurance fraud division is working with the Department of SEDU. In one COVID-related unemployment benefits fraud ring case, 62 claims were identified as possibly fraud. In another fraud ring case, there was a 26 possible unemployment claims that were referred. Both fraud rings were referred to SLED for further investigation. So there's multiple entities, multiple government organizations that are doing investigation into UI fraud. Moving to the next slide. A couple more types and examples of victim claimants. Fraudster hijacking a claim. That's when you change the information in somebody's claim, going into the system and changing somebody's claim and changing their contact information or changing their bank account information and hijacking that person's claim. Also, someone receiving a 1099 but were never unemployed or did not receive or apply for benefits. Those are four main examples that of victim crimes. So the department is actively working with multiple entities in dealing with the UI fraud. In February, late February, due notice on unusual activity and on the front of the claimant system, there was a group of actors. It's unknown how many actors, or if there was only one person who initiated a series of attempts to create new accounts on the My Benefits portal. Despite trying to create nearly 20,000 fraud accounts, none of them were able to file a claim and no money was paid out by the department. This attempt to register these accounts were used making social security numbers and personal identifying information obtained from unknown sources. So the department was unable at this time to identify whether the dark web was used, other prior data breaches with other companies, or other phishing attempts were used in order to secure these personal information, social security numbers. But of the 20,000 attempts, about a little less than half of them were using social security numbers of claims that were already in the due account. In these cases, those duplicate information triggered a lockdown of the claimant's accounts, and 3 notifications were sent to those claimants. And moving on to the next slide. The second type of fraud category that we're going to say are the bad actor fraud, when the individual was not completely honest or forthcoming when they filed their claims. So these are the people who return to work but continue to collect unemployment benefits without reporting their work or wages and/or wages. These are the people who were not reporting their wages during the weeks that work was performed. So maybe they were unemployed at the time and they got their job back, or they got a part-time job and they did not report their earnings to the department for that specific claim week. These are another type is withholding information or providing false information to the department, helping other people claim benefits that they're not entitled to, reporting inaccurate hours or earnings. There's an hour requirement. If you're trying to say that you're full-time, or not reporting all your earnings. If you're below a certain threshold, you might qualify, as opposed to being paid at a higher rate, and you may not qualify for that specific work week. Collecting benefits based on false or inaccurate information, claiming benefits when you're unavailable or unable to work. If you had an injury and you're claiming benefits, if you're not making yourself available for work, if you're rejecting or refusing to work after receiving an offer of employment, and claiming benefits under the identity of other people or someone else. So these are all examples of claimant fraud. And I'll actually give you specific examples of individuals that have been previously arrested for these type of frauds. So SLED agents arrested a former sheriff's deputy in Newberry County for allegedly submitting false statements to obtain unemployment benefits while he served in his full-time role with the sheriff's department and part-time with the school district out in Newberry County. The 49-year-old former sheriff is facing 9 counts of false statements or representation or failure to disclose material facts or to obtain increased benefits. A joint investigation was done by the department's integrity unit and SLED showed that during 8 weeks between August and October, where the sheriff was certifying his claim that he was unemployed, he was in fact receiving paychecks from both agencies, the sheriff's department and the school district, and he received about $3,500 worth of unemployment benefits. And that was actually the 3rd arrest recorded by due for alleged UI fraud. The first 2 arrests were announced in a prior post press release, and we'll talk about those 2 individuals as well as we move a little bit forward. So here, I apologize. Not the sheriff. But here, a 23-year-old woman was facing 6 counts of financial identity fraud charges. She was arrested in Calhoun County in January for hijacking a victim. And this was a clear case of hijacking a person's claim. She first offered assistance to the victim, who was a friend. I say is, I don't know the relationship now, so I'm just going to say was a friend. The investigation revealed that the woman admitted to assisting the victim in setting up her electronic deposit for her UI claim, and then later changed the bank account information by logging into the My Benefits portal and changing the bank account information from the victim's bank account to the arrested individual's bank account. This happened at the height of the pandemic, May and June of last year. The second woman was actually arrested by the North Charleston Police Department in the end of January this year and charged with 2 counts of financial identity fraud. It was reported that actually the investigation began when the person reported to the department that someone had used their identity to file an unemployment benefits claim. The victim actually realized her identity was compromised when she and herself tried to file a claim and was notified that she was unable to file because UI benefits had already been filed under her name and information. In a sworn statement to the police, the woman who was arrested confessed that she bought the victim's personal information online and used it to file a fraudulent claim for benefits. And that happens a good deal. It's not that difficult on the dark web to pay for things. To create those phishing attempts that we discussed earlier, you can get the software and the technology you need for as little as $300 to do phishing attempts and to do these ransomware attacks. That's the cheapest that I've heard about these software and technologies being sold in the dark web. I've gone through the categories of fraud. I just wanted to pause to see if we had any questions about the different types of schemes or frauds. I'm gonna cover penalties to give time for anybody who wants to ask questions. If the department finds a claim, oh, go ahead, Chris.
I was going to tell you, so Stephanie Singley makes the point, we're having a lot of hearings for fraud due to employees making claims, even though we're still paying them at full rates. And that is actually one of the ones that Demetrius and I were dealing with last year. A client had an employee who was fully employed, fully paid the whole time, and still filed unemployment fraud claims. Then we ended up having several of those for several different clients, didn't we, Demetrius?
We did. And, there's a requirement to, report this fraud, and we'll talk about that a little later. But we saw that, towards the middle of the pandemic, August, September area, and it just increased across the nation to levels that we haven't previously seen before.
And so now they know how to do it, though.
And it took a little while for departments to catch on to start doing these investigations. As you've heard in the previous examples, this fraud was being committed, March, May, April, June, July, August, and they're being arrested for it now in January and February. And so go ahead.
No, you go ahead. So I was going to say, yeah, go ahead.
I was just going to talk about penalties, but go ahead.
Victoria Sosi, I apologize if I didn't say your last name right. She wants to know, how do you report it? Did they get terminated? And I believe Demetrius will let you know where you'll see it, and then how you report it through the rest of the training. Isn't that right, Demetrius?
Yes,
I'll
cover that.
But we'll definitely keep the questions coming.
So the penalties, if the department finds that a claimant or individual commits fraud, the claimant will be disqualified for receiving benefits for a year. They'll have to repay the benefits plus a civil penalty. Providing false information is a crime, subjecting the person to legal actions with fines up to $100,000 and imprisonment for up to 10 years. So this can be investigated by a state agency like the Attorney General's office or the Department of Labor. If you're found guilty of fraud, over $50,000, you can be sentenced for up to 10 years. But even if you're found guilty of fraud between $10,000 and $50,000, you can face up to 5 years in prison and $50,000 worth of fines. I'm not exactly sure the statute of limitations. We got a question of when is the statute of limitations. Not exactly sure of the statute of limitations here. In most general cases, it's 3 years. But specifically when it comes to this type, I don't know how, if it's sent to the Department of Labor and it's been brought federally versus state, how that would be affected. So let's talk briefly about prevention tips. I want to focus on employers, but I'd be remiss if I didn't talk about what claimants can do individually to help prevent fraud. Accurately reporting the reason they were unemployed. It's disqualifying marker if they were terminated for cause and if they're not unemployed through no fault of their own. So accurately reporting the reason they were terminated, report any wages earned, even if it's just $50 to $100 a week. This department has an offset So if you have a benefits, if you're receiving a max of 326 and you make a payment of you get paid $100, you get an offset of the first 25% of your weekly benefit amount. So the first $80, 80-ish so dollars would be offset. So they would reduce the amount of your benefit by $20 if you subtract that $80 if we use that 326 max benefit for weekly allowance. Report when they are not able or available to work, or not attempting to seek work, not allowed to claim for unemployment or UI benefits if you're not able, available, or actively attempting to seek work. Report all job refusals. There's a job refusal offered to work form on the department's webpage. Avoid errors and make sure proper payments of benefits. If you've been paid improperly, make sure you're paying that money back as far as individuals, and stop claiming UI benefits as soon as they begin working. So I really want to focus the bulk of my discussion on this next slide. And this next slide is going to prevention steps, what employees can do, what employers can do to prevent fraud. There's going to be some overlap between prevention steps and actions to be taken if fraud is suspected. You'll see some overlap. And I might repeat some of these same points, but I just want to put extra emphasis on these requirements or what needs to be done by the employers to prevent fraud and actions to be taken if the fraud is suspected. So a lot of this are things that you all are already doing. It might be a refresher because some of these might have been had a little break, at least if you classified a lot of your claims as COVID-related layoffs as opposed to non-COVID-related layoffs or firings, if you will. So first one is a reviewing your quarterly statements, benefits charging. So as you all know, at the end of each quarter, most employers receive a copy of this, the benefits charged against their accounts for that quarter. Please review all those benefit charges. And that's actually how a couple of our clients found these bad actors, was by reviewing their benefit charges very carefully and noticing that people were charging their accounts who are not employed. You know, these benefit charges will affect your UI taxes at a later date. So if you disagree with any of those benefit charges or find any errors, you must protest those charges within 30 days of the date that notice is mailed. Report all new hires. Some do, some don't, but that new hire reporting program is a database administered by the Department of Social Services here in the state. And it's actually used by the department in identifying individuals who are working and collecting UI benefits. If you're reporting these new hires, it helps keep UI costs down by or helps you keep UI tax costs down by ensuring that only individuals who are eligible to receive those benefits are receiving those benefits. I encourage everybody, if they're not already actively participating in the new hire database, to participate in preventing the overpayment of UI benefits by reporting all of their new hires and rehired employees as well to that new hire website. Responding to a notice claim, filing, and request for separation information. When a former employee files their UI benefits, you all know you have the right to the opportunity to supply information to the department regarding the reason for that person is unemployed, but you must respond to the department within 10 days of receiving that notification in order to prevent that former employee from wrongfully receiving benefits. You want to make sure that you provide the department with accurate wage information for your workers to ensure individuals are paid correct. And make sure you review your wage audit notices. So each week, do cross-checks wage and new hire database with the unemployment benefits recipient database in order to identify individuals who may have improperly received UI benefits while being employed. So claims with potential for conflict are audited by this audit notice and sent to the employers, the current employer of the individual in question. So what do you do if you suspect fraud or identity theft. And I split those two in the title up, because fraud, even though a claimant could do that as a bad actor, and a person can be a victim of fraud, but I really truly want to treat the second category, that first category, the victim, as an identity theft, because that's what it is. That person's personal information, his social security number, or other information have been compromised. So first thing you would do is immediately protest that monetary determination or request for separation. You have 10 days from the mail date of the notice. So that is a time crunch. Is, comes up very fast. It's not a lot of time, but do that. Definitely report the fraud, and also have that victim employee report the fraudulent activity as well. I've spoken the definition portion of the presentation that fraud involves both individuals and or employers. So I'd be remiss if I didn't talk about the types of employer fraud that might occur. So helping others file a false claim is an example of employer fraud. Paying employees under the table or secretly or off the record and not properly reporting those wages to the department. That's another form of employer fraud. Not reporting when you hire new employees, allowing them, lights went off in the room. Not reporting when you hire new employees and allowing them to continue to collect unemployment. Let me turn these lights on real quick.
We have one of those buildings that if you don't move, the lights turn themselves off after a period of time. It can be most aggravating. Sorry about that. That happens to me sometimes too, Demetrius.
Like a statue in here. Reporting inaccurate start dates for the employees so they can be allowed to continue to receive those unemployment benefits. So if you place a start date, say they didn't start July 1st, but they started June 1st, so they can collect 4 more weeks of benefits. That is a type of unemployment fraud on behalf of the employer. Misclassifying workers as an independent contractor to avoid paying taxes on unemployment benefits. Next slide. Just a few more. Like I said, paying employees off the books, shifting workers between payrolls to lower your tax contributions, failing to provide or providing false information to prevent a claimant from getting benefits. So that kind of works in the reverse. So if they're unemployed through no fault of their own and you provide false information to spite that individual employee, I feel like that sounds so bad, but I can't think of another word right now to describe that type of action on the part of the employer. But preventing a claimant from getting benefits by providing false information is a form of unemployment fraud on behalf of the employer. Failing to file your reports and failing to pay taxes, your UI taxes, other forms of UI fraud. So in addition to the steps I discussed a few slides earlier in slide 14, there's a few more steps to prevent this type of UI fraud. Talking specifically on misclassification of workers for the purpose of UI insurance, an employer must classify a worker as either employee or independent contractor. And as you know, employers are required to pay UI taxes on employees' earnings, but not independent contractors. So in the event the worker is misclassified as an independent contractor, taxes will not have been paid and that worker's wages will not have been reported. If a wage and liability investigation of the employer initiated by due determines that you misclassified that employee as an independent contractor, the employer may be liable for payments of all back taxes with interest and penalties. Refrain from tax manipulation schemes under the experience rating system, the tax system. Employers are paying taxes at a rate proportional with claim activities by their employees. So employers with high unemployment activity, high turnover, pay higher tax rates, and employers with lower activity pays less naturally. So employers who are engaged in tax manipulation schemes avoid paying their fair share unfairly, shifting the cost to other employers in the scheme, in the tax rate. Go back one slide, speak briefly. So reviewing your notices, verify the social security numbers at the time of hire to ensure the employee's name and socials match the social security database. So you can visit the ssa.gov/employer to verify names and social security numbers. So UI benefits paid to your current employees represent a charge to your account. So as Chris and I were discussing a little bit earlier, the employee that, or those couple of employees that were still working or never were unemployed to begin with, but still collecting unemployment, that may affect your tax rate. So to protect your account, just carefully review all those notices you receive in the employer self-service portal or by mail. And then when the employee files a claim for unemployment, you'll receive that request. The monetary determination will contain information about the employee and the reason for separation. So just verifying all that information. And if it's incorrect, going ahead and reporting and challenging those charges. If you notice inaccurate information, or if the employee referred is still working with you, it's important that you notify the department. So I know it's extremely stressful on the employee side, or any individual in general that finds out that their identity has been compromised. If your employee comes and tells you that someone had filed a UI claim in their name, or they receive a 1099 form that indicates they had received UI benefits but never filed for UI, report, the identity theft they have to report. This is unnecessary. These next two slides are very important. We're going to send these slides out at the end of the presentation, but these two slides right here, 19 and 20, are very, very important. This slide is a necessity. These are the 6 entities down below. The individual needs to report to all of these entities. So direct them to the department's website. They have a UI fraud online application. They also have a UI fraud hotline, but I would direct them to the online application. The second bullet point is employer. They've notified you, but if they did not notify you initially, if they found out on their own, they're also required to notify their employer. And it puts you on notice that quarter, when you receive that audit form, you'll be able to challenge, and you have a little bit more time than the 10 days required to respond to those challenges. Also, following the form 14039 with the IRS. That's the identity theft affidavit. Make sure you definitely follow that. The individual file that. Filing a police report with that local police department. They can obtain a copy of that report that they can provide to creditors and credit agencies. We'll talk a little bit more in the next slide. Also need to report to file a complaint with the National Center for Disaster Fraud. This is run by the Department of Justice, so a federal agency, and also reporting the identity theft to the Federal Trade Commission, the FTC. So those are all necessities, has to be done. Make sure that the individual needs to report all those places and direct them to those necessary channels. But the next slide talks about additional actions they may want to consider. This is not a necessity, but if their information is compromised, it seems only natural to direct them to change passwords to their My Benefits portal if it's somebody who was collecting unemployment insurance, but also changing passwords to their email, their banking account information, and other personal accounts where PII would be available in their either in any one of their profiles, because email, personal accounts on social media, and bank account information, if you go to the About Me or that where you put in personal information they can receive, there's a lot that you put on social media that you just kind of give away. And so somebody who might compromise a password might be able to get a lot of that information needed to file a claim. Also, make a list of credit cards, companies, banks, and financial institutions to inform them about the identity theft with that police report in hand. Getting a copy of your credit report from the dispute any fraudulent charges that you might see in a credit report. place a credit freeze on all three major credit reporting agencies, and place a credit alert on your credit file if you have any credit cards. I received a question. The tax form for the IRS will be 14039. That is the identity theft affidavit form. It's a short form, but it's something to give to the IRS. According to Governor McMaster's in a speech given about 3 weeks ago, South Carolina is no longer in the state of emergency order because of COVID-19 pandemic. If I could read you a quote, stated there will not be a 31st executive order. It is no longer necessary to have a state of emergency, although it is still necessary for us to be smart, to follow the rules, to follow the guidelines, and be very careful as we continue to pull out of this virus and its effects. So Governor McMaster's declined to sign the state of emergency order, which expired on June 6th. While it didn't affect a lot of things because there's already been a transition from COVID policies. Things are opening up a lot more. School districts are opening a lot more. There's the opt-out of mask mandates for the school district. And so that didn't affect a lot of things because there was already a downturn of some of the rules and guidances at the height of the pandemic. But specifically with the department, with the expiration, they implemented 2 changes to pre-pandemic operations, and that's resuming charges to employers' contributions for all UI claims that result in payment, and the weekly waiting week will be reestablished. So just a reminder, a refresher for those for employer charging, benefits paid by to an individual's charged against the employer's account, and it's charged a rate. If you want to know your benefits rate ratio, it's the total benefits charged against the employer's account for an applicable time. You take that and you divide that by the employer's taxable payroll during that same time. And then employers are then categorized amongst the ranks of every other employer in the state. And it's broken down, each 5%, there's 20 tax rates, and each rate is broken down 5%, 10%, all the way down. So if you're paying a higher rate than majority of employers, then you'll be at a higher tax rate than somebody who's paying less benefits for that time period. So during the state of emergency, though, employers' accounts were not charged if there was indicated that it was a COVID-related layoff when they categorized during the weeks of May 14th, claim weeks ending to May 14th to June 12th, so just a couple weeks ago. If you classified that employee as having a COVID-related layoff, that was not charged against the employer's account. However, if an employer laid off someone for any other reason, then those were charged against your accounts, your benefits accounts.
So Demetrius, we have a question.
Yes.
William, first of all, they want you to tell them the IRS form number again, and maybe we can attach that actual form or the form number in our email when we forward the.
I can definitely do that. I can definitely do.
If you can type it into the chat too, that might be a good idea. And while you're doing that, William Lockard has a question, which is one that we all are wondering about, like when someone's working, how can they claim unemployment benefits, and why does DO approve it? And I'll tell you, it was our experience that they were just so overwhelmed with all of the claims, particularly last year, that they just approved them. And then you needed to appeal them. And so if you prevailed, then you shouldn't be charged back, or it shouldn't affect your experience rating. But it was very frustrating for our clients as well as you, William, and everybody else who experienced it. I just think it was that they were overwhelmed. And I know that they approved those pretty quickly. And then there's different departments that hear the appeals. My experience with the appeal department is, they're pretty good and thorough and will consider a claim. And then William says it's still frustrating even a year later. Yes, keep fighting, keep fighting.
And another thing that affected that as well is the waiver of the waiting week. That was a huge thing for the pandemic, and the purpose of waiving the waiver week was to help people get paid faster if they were really in the need. And so, not having that waiting week where the person could not, get paid that first week and then following that second week receiving benefits, that also affected that as well. Like I said, there was an overload on the system. So, like Chris said, that was an effect, but also that waiting week, person gets paid a couple payments before, any type of challenges. And if you're also employer, potentially not being diligent in checking their charges, that quarterly report, if they it could slip through the cracks and they didn't report it properly in time. So that's another factor. That's why I encourage everybody just to check all their reports, all their audits. So I went ahead and put that IRS form so everybody can have that in there. I talked about benefits. Employers, if we have anybody on the webinar who are either nonprofits or state or local government entities, as you know, you may be liable for payments in lieu of contributions. So you may elect one of two payment types, either paying 2% of your quarterly tax roll of that organization within 30 days after the close of each quarter. At the end of the year, the department will determine what your tax contribution should have been. And so it has to be an amount of equal to the regular benefits plus 1/2 of the amount of extended benefits paid during that period. If you paid less than that amount, you'll receive a bill and you just have to pay the unpaid balance. But if you paid more, then it's at the discretion of the executive director of due. You either be refunded or they'll retain the tax money that you paid as a part payment for the following year. Or the other payment is just at the end of each quarter, the department can bill the organization for the amount equal to the full amount of benefits paid plus 1/2 of the extended benefits. So either one of those payments are for employers, like I discussed, the nonprofits, the state and local agencies that make payments in lieu of their contributions. But effective the claims week ending the 19th, which was just this past week, employers will be charged for all UI claims found eligible under your accounts. So no more COVID-related charges not being charged to your account. So it's very important that you continue to check all your forms sent by the department. We talked a little bit about the weekly waiting week. Before a claimant was eligible to receive benefits, they must be unemployed for a 1-week period. During COVID, that was waived, but now that's back. They have to wait a week before they start receiving benefits. So let's talk about the tax rate this year, going on this year. The 2021 tax rate for businesses will remain unchanged from the 2020 levels due to legislation in response to the pandemic. So the tax form or the chart that's online showing the 2020 chart, showing the tax rates, is still the same rate for 2021. Although tax rates are frozen, you can still move up or down based on the amount of benefits that you pay. So just because that tax rate stayed in place, if you have a lot of charges against your account, you may move up or down, or your tax rate level might increase or decrease based on the amount of benefits paid out this year. So employers are ready to hire. There's a lot of literature on the great, I don't know how to say this correctly, but a lot of people are quitting. A lot of people are transitioning jobs right now, and employers are ready to hire, rehire, and fill their workforce. And, the departments acknowledge that. Department of Employment and Workforce have acknowledged it. SE Works is helping individuals with job searches, job fairs, interviewing, and hiring events. And, the department recognizes it and the governor recognizes it. So per governor's directive on May 6th of this year, South Carolina opted out of the federal pandemic programs for claim weeks ending the 26th, which very timely presentation because this week is the last week for a lot of these federal programs to pay out. So we'll talk a little bit about what that looks like with the winding down of these federal benefits. So let's talk about first the Pandemic Unemployment Assistance Program. So these are the benefits, if you recall, benefits to the self-employed, the independent contractors, the underemployed, and individuals who've been unable to work as a direct threat of COVID. And this included people, individuals diagnosed with COVID and instructed to quarantine and stay home. So beginning June 27th, just next week, this PUA will no longer be available in South Carolina. So any claims filed for weeks prior to the 27th will include the PUA benefits if the employee or individual is eligible. But after the 27th, there will no longer be payments made to these individuals. So the Pandemic Emergency Unemployment Compensation, this is the extension of unemployment benefits. This is the one where if you already received your 20 weeks of benefits, this extended the amount that you could collect or amount of benefits that you would be paid beyond that traditional 20 weeks for an additional 53 weeks. This was allowed claimants to extend their time when they normally would have been expired, but after the 27th, it would no longer be available, and claimants who had previously exhausted their regular UI benefits will no longer be receiving any payments. However, if claims filed for weeks prior to the 27th, they'll still include the PEUC benefits if they're eligible. The Federal Pandemic Unemployment Compensation, this is one I think everybody is familiar with. This is the extra money added on from the federal government, now 300, used to be 600. Now it's the 300 weekly add-on benefit for all types of unemployment. So if you qualify for unemployment at the state level, you will receive that additional $300. After the 27th, that will no longer be available. Any claims prior to the 27th will include that benefit if the employee is eligible or the individual is eligible, but not after the 27th. And the mixed earner unemployment compensation, this is one that came earlier this year. Not a lot of people may be familiar with this one, but this benefit was a $100 weekly add-on for those who were eligible for regular UI benefits, but also earned a self-employment income. That will no longer be available after the 27th. So what does unemployment look like after this week, leading into next week, going forward? It's going to look very similar to pre-pandemic. For an individual to be eligible, it's the same standard as was pre-pandemic, pre-March 20th. You have to be unemployed through no fault of their own, serve that 1 week waiting period, be monetarily eligible, work for long enough, made enough wages during that benefits period as far as what their look back period, be available to work, actively seeking work by going on the website, doing your 2 job searches every week, and not refusing suitable work if you were offered. You're back down to the weekly benefit amounts ranging from $42 to about $326 a week at max capped. And it's back to the 20-week max benefits period for 20 weeks for the benefit year. So we're back to normal, as normal as can be, at least within the department, as far as how an individual qualifies for unemployment, what they're paid, how long they can stay on unemployment. So that's what the department is headed towards starting next week and into the future. Know we covered a lot. I just want to give an opportunity to, answer any questions that some might have, some specific scenarios that might have happened in your workplace, and just try to cover things. I just wanted to make sure we allotted enough time. I know it's 12:50. I just wanted to give enough time. Chris, did you see anything else come through?
Sorry, I was muted. Annette Davis did have the question, how can a part-time employee receive unemployment while they're still employed with the district?
Okay, I can answer that question. So that's a good question. A lot of people don't know the unemployment. If it's underemployment, they will, as far as qualification, uh, unemployed is not just full time to zero, a lot of work to zero. There's a hourly requirement. There's a wage requirement. If they fall below um, a certain number of hours or a certain number of wages through no fault of their own, they still may qualify for unemployment despite the fact that they're still working. They would just have to report those wages that they've earned. So, for example, if you typically worked, this might be a bad example specifically for this scenario, but if you typically work 30 to 35 hours a week and your hours get cut to 15 through no fault of your own, and you're making $8 an hour, then you might be underemployed for the purposes of under the definition of unemployment, and you may be able to file a claim. So if you drop down through no fault of your own and your hours got cut, and now the money that you make will be offset against any money benefits that you've been approved for. So if that person is approved to make $300 in unemployment benefits week because of the reduction in hours, and that 15 times 8, I'm not a math major, so 120, that first 25% of that $375 is offset. So, that $300 is going to be reduced by about $45. So they wouldn't receive $300 for that benefit week. They'll receive $255. So it's just really underemployed is under certain definitions, you still be unemployed, being underemployed if through no fault of your own, you have to have reduction in hours. So that's how somebody part-time may be able to place a claim. They might not receive the full 326. The department might say it's a lower number, and because of the offset, they may not receive any benefits. If, for example, they determine that her benefits or that employee's benefits for that weekly period is only $100 and she gets paid $120 or $220, then once you offset that amount, she doesn't receive any money. And once she receives that first offset of $50, she makes too much money and the benefits doesn't pay out for that benefit week. And that's if they're properly reporting as well. So there's also that possibility. And I hate to say that, I want to give people the benefit of the doubt, that there's also the possibility they're not properly reporting those that they're getting paid.
Right. So that's interesting. I don't know if there's a means for reporting when you know that they're not reporting and they're working part-time. What was the time period, Demetrius, again, for if we identify fraud in our quarterly report, we have how many days and we file a form, and, just run through that process sort of like bullet point real quickly, if that's okay. I think we have a few extra minutes.
No, I don't have a problem with that. So if you receive the quarterly report, you get your quarterly report, if you disagree with any of those charges or find any errors, you must protest the charges within 30 days. So that's a 30-day. See the other.
And then the forms that you have to fill out, I was just going through the process that you filled out last summer for our clients.
So if you can go back, Brittany, to I believe that was slide 15. So, or maybe 6. So, or no, we can use 16. That works. So that shows the 10 days right there on the slides. 17. One more. Was it 15? I'm sorry. I got all over the place. There we go. The monetary determination and request for separation, 10 days of the mail date. So if you receive that document.
I was actually referring to the forms, but we can send them links to the forms. I think you had completed forms specifically that required specific information. So that's what I was referring to.
Okay.
Yeah. But anyway, so we've gotten a lot of good chats, and Stephanie Singley says that their appeal group, the people that handle their due appeals, are working busier than ever now. So hopefully that means that due is, as Stephanie indicates, going back through and looking at the pandemic errors and then dealing with some of the experience ratings that have been impacted by the claims last year. So one thing though, fight and fight timely, and, you know, continue to make your position known. So anything else, any other questions that anybody had? I'm looking, I'm not seeing that. All right, so look, because we're going to roll out a DEI initiative from our webinars going forward, starting in August. We take July off. Starting in August, we're going to cover a new DEI topic every month, and we're going to invite a guest speaker to join us who has expertise in the area and can provide resources, a summary of resources to employers, in addition to legal updates and the comments that we'll make on the particular topics. And so we know that this is going to be very informative. It's sort of an in-depth drill down on each disability topic in the months that those are nationally recognized topics. So for instance, pay equity is what we kick off with in August. And then September, we have Herb Johnson, who most of y'all know is an excellent DEI consultant, used to be DEI director for Michelin, and he'll be joining me in September. October's disability. November is veterans and USERA, and we'll have an ESGR representative as well, and Demetrius will be handling that one, being a veteran in himself. And so look for that blog that's coming this week, and it will tell you what we're covering through really next summer. We will still do our legislative updates, so we'll pepper those in there with these, but we do want you to know we are doing a DEI focus, you know, one that we consider is timely. And then the other thing is make sure that you're signing up for them. They'll be at the same time on the same day so that we don't confuse anybody as far as different times and such. But as always, we're always glad to talk about anything else that you'd like us to talk about. And we are covering the topics that you've suggested to us, checking them off on the list as we go along. So there's one more chat. I don't know if it's a question. Oh, Stephanie says, thanks for a great webinar. Well, thank y'all for coming. We always appreciate everyone. And Demetrius, thanks for sharing all of this information.
Thank you. Thank you, everybody, for attending.
Thanks for joining this webinar presented by Haynsworth Sinkler Boyd. To learn more about the firm and its services, visit hsblawfirm.com.